All right, guys, welcome back. For those of you who are still joining us, we are still talking money. We are at the end of the year and we cannot talk about it enough. I am Dr. Sharon, educator, author, entrepreneur, and speaker, and host and creator of Write the Book Now. Listen at me, Write the Book Now. That's my other show. The Grind Entrepreneur presents It Matters, and tonight the It is money. So I tell you, I have another super guest, and let me just read just a little bit about her. Dr. Cozette M is an acclaimed best-selling author, nationally recognized speaker, and philanthropist who inspires individuals to live in purpose, embrace passion, and achieve personal greatness through a balance in work and life. And she has been coined the money coach, and you're going to find out exactly why. So without further ado, I'm going to welcome my second guest on Money Matters, and that's Dr. Cozette M. Welcome, Dr. White.
Welcome. Thank you so much, Dr. Sharon, for having me tonight. I think we couldn't have picked a better day, a better time to really roll this topic out. But before I even get started, let me just share a little bit about me with your viewers, with your listeners, and just tell them who I am. I know she gave you guys a brief introduction about me, but let me just share. My name is Dr. Cozette M. And I am what they call the money coach. And they call me the money coach for a number of different ways, but I help individuals just like all of you who are watching right now or who will be watching a little later on to gain clarity and focus as it relates to your money, as it relates to financial planning, as it relates to taxes. And that is exactly what we are going to be doing tonight. You know, I've been practicing taxation. I've been practicing really since 1991. I took a break for a moment when I had my daughter, and then I resumed in 2000. So I have years of experience in playing with numbers and analyzing numbers and just helping people to strategically plan their money, look at their money in a different way, in a different light. And tonight I want to just educate you all and share with you all this new reform. You know, they officially passed the law yesterday, just yesterday, Wednesday night. They voted on it and it passed. And so many of us are right now in a frenzy wondering, how is that actually going to impact me? How is that going to impact my family? How am I going to make it on the first check that comes out at the beginning of the year? Well, first of all, let me just say, the laws don't go into effect until 2018. So we're safe for this particular tax filing that we're going to be filing in about a month or so, okay? And really, I want you guys, if you hear anything that you say tonight, I want you to use the hashtag taxes. So hashtag taxes is what we're going to be using tonight. I can't see any of your questions, but I want you to know, please, any and all questions, put them in the box tonight. If I can't get to them right now, I promise each and every one of you, I will go back and I will address all of your questions and get to the bottom of this thing that we call the tax reform or taxes, okay? You all can follow me. I'm on My Financial Home on Facebook. I'm under Cozette M. White on most social media platforms. So that's where you can actually follow me under Instagram, Facebook, LinkedIn, Twitter. I'm out there and I try to get information out to you guys as frequently as possible. But hey, let's get down to business because we're here to talk about taxes. My phone has been blowing up since yesterday with several calls. I've been hanging out on Facebook off and on today, answering a few calls and a few answers and questions, about this new tax form. So this law. So as I just said, we can put the brakes on temporarily because this is not going to go into effect until we file our 2018 income tax return. So we have some time to square things away, to plan, as I say. And one thing that I say to each and every one of my clients, and I'm going to say it to you all, tax planning is critical, you guys. Ladies and gentlemen, let me say it again. Tax planning is critical. Right now we're all in a frenzy wondering if we're going to be on or not, but the good thing is it's not happening. So had you not really planned this year for any type of planning, then some of you probably, as I like to say, are going to get caught with your pants down, on the IRS. You know what I mean? But listen, let me just go through some of these changes that we will be hit with as we progress. First of all, next year when you get your paycheck, when you go to that JOB, just over broke, and that first paycheck that you'll be getting in the month of January, you are going to see a slight variance in that because the tax bracket will change in 2018. So, I've had some people call me and say, do I need to change my W-4? What is it that I need to do? Here's what I want each and every one of you to do. I want you to prepare for getting your 2017 income tax return done as soon as possible. When you have that visit, or you go see your CPA, when you go see your accountant, whomever is preparing your taxes, make sure you spend a little extra time with that individual to do some planning for 2018. And it's at that point when you can make a decision if you need to change your withholdings. Maybe right now you're at single and 3, or you're at married and 3, and you really need to be at single and 0. Now's the time to make that shift. Okay, think about that, and think about it hard, and think about it strong when you visit your preparer this year. Just don't allow him or her to bring you in, get that tax return done, and not spend any educational time with you. My clients will tell you I'm constantly educating them when they come in to get their taxes done, so that we're planning for the next year, especially if you owe. All right, so let's talk about this new standard deduction. All right, in the past, the standard deduction was a lot lower. What they're doing this year, or with the new reform, shall I say, is they're increasing that standard deduction. So it used to be a number that was a lot smaller, whether you were single, whether you were filing as head of household, a widower, married filing separately, or married filing jointly. Now what they're doing is they're taking the lower threshold and they're increasing it. So now the standard deduction, the initial amount is at $12,000. So when I look at it, those of you who, and what they're doing with that, in my personal opinion, is they're really trying to phase out or not have as many taxpayers itemize. Because as you know, when you itemize, for those of you who do, you're reducing your taxable income. So just know that the standard deduction has increased to $12,000, and that's for those that are filing single and those that are filing head of household. I believe that they're going to keep it at $12,000 for the head of household as well. All right, the child tax credit. Those of you that have kids or children under the age of 17, by the time you filed your tax return, or by December 31st, if they're 17 or under, then you're eligible for that child tax credit. Now, in the past, the child tax credit, and I use that word credit because it is a credit, is just not a refund, and there is a difference between the two. So when you file your return and you have children, now you'll get a credit of $2,000 per child. Okay, now there is a threshold. If you are a single individual, then if your wages are $200,000 and below, then you meet that criteria. If your wages, if you're married filing jointly, and I believe the threshold is $400,000. I don't know that number off the top of my head, but I can definitely address it. Then there's the threshold. So for single, the threshold for getting your married, if you're single, the threshold for getting your child tax credit is $200,000. Okay, and the credit amount is $2,000. All right. Another beautiful thing that I think that they've added to the tax law, which we didn't see in the past, is if you have, say, your parents on your return, or you have another relative on your return, your elderly parents, then you're going to be allowed to get a credit. And from what I understand, it's about a $500 credit. So that's a good thing, okay? Now, let me talk about what I don't like about this new tax reform. And I think for those highly compensated employees and those that itemize, is definitely going to hurt you. And that is our personal exemptions. Okay. In the past, for 2016, the personal exemption amount was $4,050. So for the family of four that files a tax return and maybe their taxable income was right at about 100,000, they were able to reduce that taxable amount by $4,050 times 4, and they would be taxed on about 84,000. Okay, so since they're doing away with the personal exemptions, that means we as taxpayers are being taxed on a higher dollar amount at 100,000 versus what we used to see at 83 or 84K, if I'm doing the numbers correctly. And for those of you who don't know me, I always say numbers are sexy, and they really are. You just gotta like them, okay? Especially when they start getting zeros behind them. But personal exemptions, I really frown on the fact that they got rid of that. That was such a great benefit to all taxpayers, no matter what tax bracket you're in. It was a benefit that they've done away with it. Okay. The tax, state and tax limitations. Right now, as it stands, and this will be the last year, we'll have the opportunity to take advantage of it. But there was no maximums on the amount that we could take for our state withholdings, our property taxes, and our local taxes. But starting in 2018, it's going to be a cap placed on us. And what that means is we can only write off up to $10,000. Okay, so let me just throw another example at you. This year's, hypothetically speaking, let's just say your state withholdings from your payroll checks or whatever the case may be, just say the number is $6,000. And let's just say your property taxes and some other taxes equate to about $6,000. That's $12,000 right there. So this year, and this is the last year, you'll be able to write off that full $12,000. But come 2018 is going to be a cap, and it's only going to be 10. So again, that's going to hurt you as the taxpayer. All right. So when we talk about state and local property taxes, or just property taxes in general in that category, we're also talking about our property taxes, such as our DMV registration, anything that's personal property that we include in that tax return. Okay. Another thing that the Internal Revenue Service is doing, they're putting a cap on mortgage interest. All right. So for those of you that, yes.
Okay, you have a question on that, Dr. White. Someone says, how would that impact hair property taxes?
Hair property taxes. That's a good question. I didn't know that we had a such thing as hair property taxes. And that's air. Oh, okay. It falls into the same category, but air property taxes are probably more on a business tax return. So right now, what I'm focusing on is your personal tax return. So that air property taxes is going to go on your business return, and there's no cap on it. Okay. So we're talking about personal property. We're talking about state taxes that you pay or have withheld from your paycheck. We're talking about your DMV or your car registration, those type of personal property taxes. Okay. So hopefully I cleared that up. If not, just make sure you leave your question again to say, please clarify, Cozette, you didn't answer my question. I need more clarity. Okay. Let's see, where was I going? Alimony. Alimony will no longer be a deduction if you pay alimony, and if you are divorced after December 31st, 2018, then, and you have a court order to pay alimony after that point, you will not be able to include that alimony in your income tax return. So if you're paying him or her and she's receiving it, then she doesn't include that as income on her return, and you won't include that as income going out or credit on your return as well. Okay, so student loans. Student loans, the deduction for student loan, which is currently at $2,500 per year, we're safe for right now. They didn't really impact that. They didn't really touch that. So I think that we are safe. The great thing that I say to our taxpayers that itemize and you have an excessive amount of medical deductions, they have temporarily reduced the amount that you can write off. So in the past, or let's just say this is the last year, the first 10% of your medical expenses you couldn't write off. So let's say your adjusted gross income is $100,000. That meant that the first $10,000 of your medical expenses you could not write off. What they've done is reduced it to 7.5%, so that if you make $100,000 and you have medical expenses, then you can write anything that exceeds 7.5% or $7,500, you're able to write that off. Okay, a lot of times when my clients sit down with me, and it's a gray area, I have some clients where they meet that threshold and some that don't, but that little bit amount, it helps when we're talking about reducing our taxable income. It helps when we're looking at the total amount of itemized deductions that we're writing off. Okay. The other thing that they're doing away with is your tax preparation fees. Now, if you file a business return, you can write those tax preparation fees off. But if you are just a everyday taxpayer and you're filing just your 1040 and you have a Schedule A, in the past, we were able to write off what we paid to have our tax preparation, to have our taxes done. Going forward in 2018, they're doing away with that. Okay, so all of these little things add up, and all of these little things will hurt a lot of the taxpayers. And if you're not planning carefully in 2018, then like I said at the beginning, you're going to be caught with your pants down, okay? So, and for those of you that may just be joining us, I said this earlier and I want to say it again. This new tax reform, we're okay for 2017. Okay, so when we go next month or the next few months to file our return, we're okay. But the wages and the money that we make in 2018, this is the time, or that's the time that we'll want to plan accordingly, because in the following year, that's when all of these changes will impact our 2018 tax return. Okay?
Okay, so we have another question. Will there be an advantage to itemizing your deductions personally and as a business in 2018?
In 2018, once again, I'm going to say yes. It's always an advantage to itemize, in my personal opinion. If you have the deductions, then yes, you definitely want to itemize. But what I guarantee is going to happen, and I see it all the time, say for instance, you're accustomed to itemizing, because in the past, the itemized deduction, I believe it was, the standard deduction was $6,000. I don't remember the exact amount, but just say you have a home and your mortgage interest over the years was maybe $6,000. You have property taxes, maybe it was $3,000, that's $9,000 right there. And you have some other little expenses. In the past, that's what you was able to write off when you itemized. Now they changed the standard deduction to $12K. Some are going to benefit on that end and some are not. So again, the person that answered that question, it's a catch-22. It may help you, it may not. But I always tell everyone, stretch to itemize on your return, to take advantage of the itemized deductions. And for those of you, maybe you're not clear what falls into the itemized deduction category, leave me a note in the group. I will get back to you. I will answer that, because a lot of times everyone doesn't take advantage of everything that you can itemize on your tax return. Let's talk about businesses for a second, because that question, I think, what was her question on business?
She asked, will there be an advantage to itemizing your deductions personally and as a business in 2018?
Okay, for the business, definitely it's always an advantage to make sure that you're maximizing all of your operational expenses or your business expenses on your tax return, unless, and I'm going to say this for our small business owners, our entrepreneurs, maybe in the past you've carried a business loss for several amount of years, and again, it comes with tax planning. Maybe you need to make sure that you show a profit that year. So will it be to your advantage? I don't know. Every situation is different. I've been practicing for years, so no two situations are the same, but you always want to make sure that you're writing off all of your business expenses to make sure that you're reducing your taxable income on any tax return. Okay, that's the goal, to reduce that taxable amount. All right, so let me just switch over for a minute and talk about our corporate taxes. As we know, this tax law was put in place to benefit our corporations. Just right off the bat, those of you that are set up your business structure as a corporation, and I'm not talking about LLCs, I'm not talking about partnerships, I'm not talking about sole proprietors, I'm talking about a S Corp or a C Corp, a corporation. Right off the bat, the taxes have been reduced from 35% to 21%. Okay, so that's a huge, significant savings for anyone that has a business structure that's set up as an S Corp or a corporation right off the bat. So, it makes one kind of rethink about, do I want to restructure how my business is set up? But once again, in order to restructure that business and to reap the benefit of that tax deduction, you have to meet certain criteria as far as income levels to really benefit, from that reduction. Okay, so let me see what else is. One thing that they didn't change, and this is for you, Sharon, Dr. Sharon. They didn't take away the teachers' credit that the teachers get, which is a good thing. You guys are doing such a great job. They didn't take away that. What they did do, though, and I think I touched bases just briefly, are mortgage interest. Okay, if you are a new homeowner and you purchase a home, let me read it right for you guys, because it doesn't impact our current homeowners, but if you purchase a new home, then there's going to be a threshold on the amount of interest that you can write off. Okay, yes?
So just a clarifying question, a new as in newly built or just purchased a home?
Just a purchase of a home. It doesn't have to be a brand new home, but just a new homeowner. You purchased a home. You go out and you get a mortgage next year, a brand new mortgage. Then the amount that you're eligible to write off, the home cannot exceed $750. Anything above that $750, you won't be able to use that interest on your tax return, in your tax return. Okay, did that make sense? Okay. All right. And capital gains, you'll still be able to exclude up to $500,000. So it really was not an impact just yet as we talk about the capital gains. The 529 savings account for parents, that was not, let me just make sure, because I don't want to say that it was not an impact on that. So you're still able to gain the maximum benefits for your 529 savings account. I talked about alimony. The one thing that they're also doing away with is the moving expenses. So for those that have moved from one part of the country to another part of the country, or moved more than the threshold miles, they're doing away with that. You can't write that off. So if your company relocates you and they don't pay you, then you can't write that expense off on your tax return. And it could be a significant amount. I've seen it get really high on some employees, and others, it's marginal. Okay. Let's see what else is going on here. How am I doing on time, Sharon? Oh, okay. Let me jump to this because there's so many things that have changed and I can't get to them all, but what I really want you all to do is seriously leave questions in the box. But what I want to wrap up by saying is that make sure that you are preparing right now for your taxes. Start getting your books in order. If you are a corporation, a small business owner, make sure that you have your balance sheet in order. Make sure that you have your P&L in order. Make sure that you have an accountant or someone, a bookkeeper that has either helped you gather everything or will help you gather everything. Do it now. I can't stress it anymore. Do it now because April will roll up on us really quickly and then you'll be scrambling. So start now if you haven't done it. Make sure that you gather all of your 1099s. Make sure that you gather all of your W-2s. Make sure that you gather your student interest loans. Make sure that you gather your retirement. Make sure if you have daycare, you pay daycare, you're gathering that information that you need from your daycare provider, and she or he should be providing you with a form W-9. If you are a business owner and you need to issue 1099s, the deadline to do so is January 31st. January 31st falls on a Wednesday, if I'm correct. You need to make sure that you have that information to your tax preparer as soon as possible. So the 31st rolls around, or even now, if you know what you've paid your vendors, that you will be sending out 1099s, your independent contractors, you should be in a position where you know what those numbers are. Make sure that they have completed form, I said that wrong. Your daycare provider should be giving you form W-10. You should be having your vendors complete form W-9 so that you can send that information to your tax preparer. They can prepare those 1099s, get them back to you for review. They're postmarked by January 31st. They're transmitted to the IRS. You're not subject to any fines, and they have their information. So I hope and pray that this information that I have shared, I know it was really quickly. I hope that it has helped some of you. What I want you to do, if you can't leave your information here, you can always head over to my page. I'm at Dr. Cozette M. White. You can leave questions under the business page on Facebook. You can do the tax page, which is White Tax Services. Okay, White Tax Services. Our corporate office or our corporate name is My Financial Home. If you go there, you'll see all of the services that we offer. We don't offer just the tax services. We offer accounting services. We offer financial planning. We offer assistance for those of you who may be struggling with your personal finances as well. So we service clients in 50 states. All 50 states, we service clients out of the country. So we're global. We are a global provider. And I know I got to wrap things up and I'm rushing, but any questions?
I have one last question for you that came in.
Yes.
Do you have a document that reference the do's and don'ts for 2018 taxes?
Yes. Actually, well, let's put it like this to those of you who are listening. These final laws were rolled out yesterday, but I'm in the process of putting it together. Again, just reach out to me. It will be available next. I think I told her to have it ready for me on Tuesday. So if you leave it, I will get it out to you. If you go to my page, www.myfinancialhome, you can sign up for our mailing list. And that way you will be on the mailing list to get various literature, information, updates that we disperse throughout the month, throughout the year. I'm all about education. I'm big on education. I'm big on making sure that my clients are informed. And if you want to be in the know, head over to www.myfinancialhome, opt in for our mailing list, and you'll start getting our information.
Okay. Is it .com, .org?
.com. I'm sorry.
.com. Okay, excellent. I tell you, this has just been, I can't type fast enough. So I really, really thank you. And like you said, it was so timely, just what we need to get some understanding for all of these laws. But again, guys, reach out to Dr. White. Really, get her for your financial planning or your tax preparation, whatever you need, definitely reach out to her. And I'm going to ask you, Dr. White, also, if you can make sure, I tried to type in your contact information, but after we're off, you can go to the page and type it in. So if they have questions or want to sign up for your newsletter, they can do that.
I will definitely head over there right after we're done and start answering questions, okay?
All right. Thank you so much. This was wonderful. Those of you who joined us live, thank you so much. And those of you who will catch the replay, because this will stay up, I thank you as well. So timely. Thank you. Have a wonderful night.
Thanks.